here. Whether the market is above or below the zero line is an indication of whether you have strength or whether you have weakness. Obviously above the line and the more above the line and the steeper the angle, the stronger the momentum higher, or below the same way, the stronger the momentum lower. Now let's go back again. I want to go to a chart, show you a little bit more about what we're going to be looking at on the computer. Go back to the Vantage Point chart on my screen. And to show you a little bit more about some of the indicators that I use, because I haven't showed you all of the indicators yet. Now we're back to the Euro-US dollar pair again. We're looking at the same chart that we were before. And now I want to add another one. I don't mean to put too many things on the screen at one time, but I want to add another indicator that I think is very important, particularly in the area of currencies, because you have some fluctuations up and down. The currencies that are the indicator that I'm going to be looking at, I'm just going to add it on top of what we have here, and hopefully we'll be able to keep it all straight, because I've got my lines nicely colored so you can tell some differences between them. And that is the predicted high and the predicted low. On the Vantage Point system, the predicted high that I'm using here is shown by the gold or orange line on top. That's a predicted high for the next day. The pink line, or fuchsia, I guess, as color conscious might call it, indicates the predicted low. These indicators will help you pick up some good turns. You don't do these in isolation, because you want to have various indicators come together and to be able to show kind of what is the potential signal going to do. You want to have your momentum going right, you want to have your no index going right, and you want to have the breakouts going right. We're looking at primarily a breakout trading. Now we're going to cut this time down a little bit here to a 2-month chart so we can see a little bit better, and to show you a couple of examples of some things that can occur. First of all, I want to point out there's a sample that we have right here where the market has a big white candle, goes above the predicted high, and you'll notice down below you have the predicted neural index is sitting at 1. You have the predicted differences starting to move up. Is that a good trade? Have this one right here. We're going to talk about that in a little bit more detail. Switch now back over so I can mark this chart up a little bit and to show you on the full screen some of the indicators, some of the charts, and how I can use them on with the predicted highs and predicted lows. We should be back now to the full screen. I mentioned that we have a situation with the market being as it is with the predicted high and predicted low. We always want to make sure that we know what we're talking about here in terms of, is this a good trade or is it not? First one I'm going to look at is this bar right here, as I mentioned before, what looks like a nice breakout. It's moving to the upside. It is a potential trade there. This did occur, as you may recall, on November 25th. I think it was the day before Thanksgiving. So it's possible that you may have been kind of leery. You're thinking about the holiday. They may have been thinking about the holiday ahead and may not have been too concerned about what was happening in the markets. But had you taken the signal, what I tend to do is I like to take the predicted high and then add about 20 points. I want to give it a little bit of leeway, to be 20 pips, because I think sometimes the traders tend to kind of fake out people, jabs, all those other kinds of things that if you've been trading for a while, you're experienced and you know that these types of things happen. So I give it a little leeway. So let's say at 20, we're going to use 20 pips as our margin for error there. First, we had the predicted high on this particular candle at 150.32. So that meant you would be buying at 150.52. Now, another key concern that you need to have is risk. How much you are willing to risk on this, that it is the correct move? Is this something that you can handle, not handle? That's a kind of a thing where you have to determine for your own self and your own account what you can do. in this case, probably rather than in more cases, I would like to have the protective stop below the predicted low, but that's a little bit far away. So I would say that on the entry candle, you put a stop right below the low of that candle. In this case, that would put the stop below the candle at 149.55. Okay, and then on Thanksgiving Day, you see that we had this turnaround. Everybody else was trading, and U.S. traders were kind of sitting on the sidelines eating turkey and so forth and not, so they weren't paying a lot of attention maybe, but we did get down almost to the point here where we were stopped out, but we just barely kept in. And then the next day, you may recall, we had the news about the Dubai debt situation and how things were falling apart there, and everybody was scrambling. And so it's a situation that gets too volatile and maybe too difficult to handle. Even if you have your stop, as I mentioned before, below this candle here, if you had it below this candle at 149.55, even having it there from the point of entry at 150.52, that's almost $1,000, almost a full point. And that's one of the reasons that I like to trade in the smaller size contracts, because if it's $1,000 for the full size contract, that means it's $100 for the mini contract or the micro futures contract, and you can then maybe trade 4 of them or 5 of them. Or anyway, you can tailor the amount of risk you're willing to take depending upon the size of the position that you take. Now, so that trade in itself was not particularly a good one, but it does show you that there are things that you, because of the signals that you get with Vantage Point, that you can get out and try to protect yourself as much as possible and wait for those big trades to come along, because as you know, they don't always happen every day, and they don't always happen exactly as you think they're going to happen. Now the market, as it has moved sideways, and it depends a little bit here again on the type of signals you're using and what you're doing, but if you, let's say that you are in a situation that you are kind of following along, you're watching the news, you know about Dubai, you know that you might want to change your strategy a little bit, because I don't think you can trade currencies strictly only. Technically, I don't think you can trade on the basis of news only strictly, but I think you need to combine the two, and you got to be aware of what's happening in the world. So you get to this day right here where you have a situation where the market is kind of soft. I mean, we haven't seen any further advances above that previous high that we had. It's not looking real strong. Question now is, we still have this indication right here from the predicted neural index that it is still at 1, so that says it's still bullish. We have the situation where the predicted differences are starting to turn down, so we have kind